I'm so glad that you are joining us today and welcome. And after watching this news that the Federal Reserve Bank has issued a warning of the US housing bubble, I could not sit back. My consciousness did not allow me. And so that's when I said, since I have proven and time tested, because our clients, none of them lost any money during that 2007, 8, and 9. I'll be showing you all the proofs here. All right. And that I have these proven and time tested answers, and I have to give back to my community and the country that I love. So, with that in mind, I am doing this recording. And please, if you will, you just kick back and relax, and you're not try to justify things because I want you to grab what I'm going to show you, and that could be saving you a lot and lot of money, not only the money, just okay, and a lot of frustration and headaches. So let's get started. Federal Reserve Bank did a study, and they said, well, home equity should be always be separated and put to work to boost your savings as well as retirements. And the big thing is reduce your risk. And by the risk, what I mean is you must have seen it in the Los Angeles fires earlier in January of 2025 that people lost everything. They didn't even expect anything that could happen to them. And hundreds of homes were lost, and lives are upside down that have still not settled. All right. So, folks, this is the Federal Reserve Bank, and now they have issued a warning also. All right. Folks, this thing is serious. Same. Your home is worth $500,000 and go down just 10% only. All right. You will guaranteed lose. I'm not trying to scare you. Please, no, pardon me for that, but this is, I'm just showing you the reality and trying to, share the urgency of this thing. Okay, you lost 50,000, and now imagine how long will it take for you to save 50,000 that you lost instantly because either you procrastinated or you did not know how to protect it, but time to do it is now because just last Friday on the national news, I heard that they were saying they have looking at the future of the economy and stuff. They have started tightening credit. That means you may not be able to, get any money out of it or not all of it. All right. So now, if it is 20% you lose, you'll guaranteed lose $100,000. Just imagine how long will it take for you to save that 100,000? Now, many of the people don't even save this much in their lifetime, and that you lost instantly because you either procrastinated or did not know how to protect it. And today we are going to learn everything this thing, and I'm going to even show you how to recession proof your money, including IRAs, 401ks, and stuff like that from losses in case, yes, okay, the stock market and the economic crash also. But you have to take action in case. No, please. Oh, let me another thing share it with you. I'm not trying to sell you anything at all. No, you're okay. This is my giving back to the community and the country and to my friends and family, that from what I know. And I felt that if I did not share it with you, I would be doing a disservice. So, making money is not the only purpose in life, but you'll yourself see it as here. And you do not have to take no action at all, but I'm just sharing with you of what I know. All right. And my name is Bir Grewall, and I'm the founder of Financial Advisors of America Inc. Professionally, I'm a top recommended financial strategist, advisor, and an author with a proven track record that none of my clients lost any money during that 2007, 8, and 9. That's why you must have seen me on the national media also quoted. They were asking me how we do it. All right. So, coming back, the warning, please take this thing very seriously when Federal Reserve Bank itself says you got to. Now, David Starkman, he was the former Reagan budget director, and he says, I see a fiscal bloodbath coming very fast. And Chicago Tribune did a series on this home equity. They said large equity in your home can be a big disadvantage by having all your cash in your by having the cash in your side fund. Most homeowners are better off than if their equity is trapped in the house. Houses are meant to be lived in, not to store cash. They said large idle equity, also called having all your eggs in the same basket, can be very risky if you suddenly need cash or emergency or something. Let me just bust a myth right here also that most of us we think that the equity that is built up in our home it's our money. It's not, okay? And they have said it here. Most people, if they unexpectedly need cash when they are sick or unemployed or something, that you're taking that equity out can be impossible. No, you have to take it out and have it in a side fund, and that's what the Federal Reserve Bank also said to boost your savings and your retirement and to reduce your risk. Folks, this is how serious this thing is. Now, many of us had been and or have paid up homes also, right? And we've been paying off the homes with a view that, hey, we want to have a paid up home. Folks, I also tell my clients that you must have a paid up home because there is a huge security in having a paid up home, especially when you're getting up in age. However, the way most people do it, that is a very wrong way. And the way we suggested that, and it should be in a side fund, that money growing in a safe side fund, which I'll be showing you. So that way, anytime if you want to, you take the money out of that side fund and pay it off. But it should not be trapped in the house. Houses are meant to be lived in and not to store cash. And the reality is, you might have heard about that Hurricane Katrina in New Orleans. A few years ago, it happened, and 80% of New Orleans was underwater. And at that time, you might even know about Senator Trent Lott. He was a very respected senior senator. And so when the his house was also underwater. And when the reporter goes there to him and asks him, Sir, how do you feel about it? And he said, sadly, we just paid off our home. All right. And now just imagine this thing. He is a very smart senator, right? He's the best at his profession, right? But he did not know what you are going to learn in a few minutes here, that before he was happily paying off the home. So when that reporter asked, he said, we just paid off that home and that was going to be my wife's and mine retirement adobe for the rest of our life. And then he said, now we do not know what we will do because that was the only house that we owned. All right. Now, on the East Coast, it is tornadoes and hurricanes. And in California, we have fires and earthquakes. So it doesn't matter which way the disaster strikes, you need to be fully protected beforehand. All right. So now let's just get to where should we put that equity money, the built up equity money, or we call it using other people's money, right? Now, remember many times when we had to start a business or something, or even buy a house, we would be asking friends and family to give you a loan. And many times what happens is you are not able to pay it back, and then you lost the relationships also and stuff like that. No, right now, see this year, equity money is your other people money. Use this one and solidify your relationships. Don't lose those. Those are important. Okay. So where to put that money for safe and consistent growth? Folks, I'm going to be proving it to you everything with facts. right? Just do not take my word for it, and I will even in a minute show you how I got to this level. Why am I qualified to be talking these kinds of things? You all know Warren Buffett is like the number one investor, and he says his principle number one is do not lose money. Number two is do not forget rule number one. And then that's he also says that the quickest, the fastest, and the most amount of money to be made is in the stock market. And in that same breath, he says that that's where most and most of the people will lose their life savings also because they do not know what they don't know. And he says always you participate in the upside only of the stock market without the downside risk. I'm going to show you what he means by that one in a minute. All right. And so, how our planning is different is that we incorporate time tested financial strategies, all right, and used by almost every other one. But our clientele is, the more affluent and rich and famous have Warren Buffet have little bit more different rules that they go by, and we share those ones with you. And then what we do is we incorporate the laws governing money and the IRS rules to come up with the results that I'm going to show you in a minute. Now, why am I qualified to do this? Okay. I also was a pretty successful advisor. I started off in the 80s in financial advisory business. And so I was an average guy and with a custom hilltop home in Aliso Viejo, California. It's very close by to the beach in Laguna Beach. And I did not know all of these principles that I'm going to share with you. And so after losing everything, I decided to learn the rules of the game, how the game of money is played, and then rules of safely growing money. It took me over 10 years. I read many financial books, and took courses and went to seminars. At that time, they didn't have webinars, so I had to go. I was crisscrossing the whole country and attending every seminar of the successful advisors. And my mission was to collect the success nuggets as to what is working for them. And what I you learned in that journey was that if you made Uncle Sam your business partner, right? And Uncle Sam can help take your money to whole new levels and besides growing the money safely. So what I learned produced amazing results. I'm going to show them with you. All right. So, we will be discussing how to take your money to whole new heights in a liquid, safe, and tax-free environment, and in this very order. Because back in 2007, 8, and 9, remember you might have seen your investments and your RAs, 401ks, when the crash was happening. You went in there, you tried to get the money out, and they said, no, you cannot get to it because the money is frozen. It might have happened to you also. You might even know this thing. All right. And the reasoning given was that we cannot have a run on the money and run on the banks because that will destabilize the American economy. All right. Then after that 10 years, what I learned was that I don't want my clients to be, your money will be in a liquid thing. And so that way, if you feel you get nervous about what's going on, and with a telephone call, you can take the money out. And it should be safe. You should not lose a penny. You should be able to keep the profits also till that time, and no matter what happens, the stock market or the economy crashes. And then if you put it in tax-free environment or made Uncle Sam your business partner, he'll help you take your money to whole new levels. And so we are going to be discussing. Please kick back, relax, and so where are the answers? This is what I learned after losing everything in those 10 years. DEFRA, TAMRA law. And then if you have IRS section 77 or 272E, you set up the money in compliance with these ones and pass their litmus test. By the way, with my clients, knowing what I know, I have them pass this test with the IRS beforehand, okay, because if this is important, folks, because if all the I's are not dotted and T's are crossed, and everything that I'm going to be discussing, it's not going to be there because the laws are very strict on this thing. So what I mean is that I do the litmus test in writing first with them and leave it with the client. So that way, even if I'm not around at that time, they will not have to worry about it because their money will be growing, compounding, and paying all tax free. And but if it is not done correctly, anyone can say, oh, I'll set it up that way, you're right. If it is not done correctly, if all the I's are not dotted and T's are crossed, by the time you find out, and that will be when you take the money out, and the IRS could say that, hey, it's not in compliance, and so you will not get the benefits, but by that time, it will be too late, and it will be your money, folks. That you are the one who's going to lose out. I don't want that to happen. All right. With those rules, I just shared it with you. Let's take an example right here. Here is $1 in this example. $1 doubling every period for 20 periods. It don't have to be 20 years. It can be 20 months, 20 days, 20, whatever. You just get the concept of it. In tax-free environment, per that TEFRA laws and IRS rule, and versus taxed as earned. And the way it is supposed to be, okay, is this is where we are at. And by the way, let me just share it with you. I will never ever be a party to lying or cheating on taxes. However, knowledge is power, right? The way things are, we earn money and then at the end of the year we pay taxes and then the remaining money doubles after that, okay, and then we just keep on going to it, all right? So at the end of those 20 periods, it will grow up to be about $28,000. However, if you set up the money in compliance with that EFRA laws and 770211A and 72E, that same money will be growing tax free. So it will be over $1 million. All right. So we take people out of this position into a millionaire position just by having them comply with the TEFRA laws. Now you must be thinking, I have RAs and 401ks. Yes, they fall in about halfway in here because they are only tax deferred, not tax free. All right, so they are better than this thing taxed as earned. But knowing what I know, I do not own an IRA and I have never owned and I never will own an IRA. And if you're thinking that that gives me a tax deduction, there are much better ways to get tax deductions. And but this is where you want to be. All right. And it's easy to get into that one and just comply with this thing. And like I said, okay, IRS allows you to, okay, do that litmus test upfront, and you get to keep a copy of that one that it complies. So then later on, there is no arguments that hey, if all the I's were dotted or T's were crossed. All right, that's how important it is. All right, like I said, you know, financial strategies, but yes, okay, this is a turbo booster. That's how we are different. And what were the results? Remember, yes, okay, it took me over 10 years, and then in 2007, 8, and 9, that's when okay, here, let's get into it. Proof our strategies work. Okay, while others lose money when the stock market goes down, with our strategic setup. That is the key, folks. This is the key. All right. And remember, I just mentioned that we get that litmus test results up front that says it passes that test. All right. So the setup is the key. All right. Now, here is an example back in 1999, 2000, $500,000 in here. And let me just give you a disclaimer. This example that I'm showing you is to be taken as an example only and not your results, because there are so many moving parts in money growth. So your results will be different. It could be more or less, but please, in this thing, even though these numbers are correct, but do not take it that these will be your results. And by the way, this is taken out of Missed Fortune 101 book, and so it's all explained in there too. All right, so here what we do is with this $500,000, when the market goes up, okay, this person is in the regular, the way everyone is used to putting the money in the market, whether you do it yourselves or through a broker or stuff like that. Yeah, right. And this is where we set it up. Okay. Now here it's upside only of the stock market, and you get to keep the profits also up to a limit. All right. And then when the market goes down, the money freezes and you get to keep that profit also. And in this case, it was 66,000. You're right. And then this becomes a new restarting point. All right. And then reset. So this is a new one. You cannot lose a penny out of this. And then when the market goes down for 2 years, your money gets frozen, and then when it goes start to go up, you start to go up with it. And folks, here it is 2007, 8, and 9, the crash when it happened. You're right. Okay. With us, you had kept the profits also up till that time, and your money automatically freezes. And I was also getting the calls from my clients at that time, Bir, what's going to happen with our money? This was the best thing that I could tell them. Hey, do not worry about it, because you are completely safe, as well as your profits are completely safe. And all right, so now, after that, this thing came out to be about 418 versus over $1 million right here, right? Now, folks, how the money game of money is played. If this thing now goes up 10%, it will go up about $42,000, and here it will grow up over $107,000. All right, and then you'll see, okay, if we made Uncle Sam the business partner with you, which we always do with everyone, all this money will be growing, compounding, and all pay out all tax free. So there is no limit as to how much you can put it into it. And this is our proof of our track record of 2007, 8, and 9. And now, after that, yes, you might have seen me quoted on the national news. They were asking me, how do we do it? So the winning money strategy is annual upside only lock in. You get to keep that profits also, you keep the gains up to those limits. And everything I just showed you in the past graph was with those limits in there, the caps. We call it the caps. That's the industry lingo. All right. And then that becomes a reset point. You have kept all the money and profits also. And then it restarts for the second year. All right. And you never lose a penny. Okay. Warren Buffett's wealth increased from $109 billion in 2019 to over $300 billion. Folks, using these kinds of strategies and other ones. He uses many different ones too, you're right. But this is the power of what I learned after losing everything. Now, in this ditty, folks, let me just, in this example, please bear with me, don't go ahead. This example is that $100,000 going up 10% 1 year, then it loses 10%, then it goes up 10% again, then loses 10%, okay, this thing for 10 years. All right. Now, if you ask someone this is the scenario, they will say you will never be able to get anywhere. Actually, yes, they are correct. You actually lost 4.9%. However, with us, that going up to the cap, in this example, it is 10% cap, right? And then this becomes a new reset point and restart from here, keep on going up like this thing. And it will go up to be 161,000 or 69% more money for you or 61% gain of your money. From a example, if you ask the average person, they will say you'll never get anywhere in life with making 10%, losing 10%, making 10%. So, folks, this is the power of what I learned after losing everything back in 1995. And now I'm sharing this thing with you. Another ditty, let me just take it that if we lose 25%, you have to get back to that same level, you have to gain 33%. It's not that if you made 25% back that you're no. And now back in 2007, 8 and 9, people lost between 40 to 60%, and that has to be followed by 100% gain. All right. And just imagine how long will it take to make that 100% gain, and you lost all that usage of the time and compounding effect of it. And with us, since our clients did not lose any money, they are way ahead of others. Like I showed you that 42,000 versus 107,000, they are way ahead of others who recovered from those losses. Yes, many of you have recovered from those losses, but you could be much, much ahead if you followed all the things that I'm sharing with you and applied those things to your own money. All right. Now, let me just, while I got you on here, let me share with you about the money part of it also. Remember, so far we are discussing that home equity and where to put it and stuff like that. But Steve Forbes just recently said that there's a huge financial crisis coming, and okay, what's ahead is, and it's not me saying it, everywhere you turn, you see this thing that talk of recession or stock market crash coming out. Another thing which we do not, no one's talking about much about it is Time Magazine said, why is it time to retire your IRAs and 401ks? And Steve Gandel, the author of this thing, he said, and he shows you what to do instead. All right, we are already discussing. Then NBC did a retirement crisis, report on this thing, and they said that the great 401k experiment and the IRAs and stuff has killed many Americans. And this is the reason, folks. Listen close. Mr. Trump had mentioned that we are giving you much more options for your IRAs and 401ks, and probably this was the reason he had to give. He's responsible for providing security to Americans. So that's why maybe they came up with those different options because they know that this is brewing. All right. So I don't want you to be more stuck in that one, and I want you to be funky. Okay. And how serious is this thing? Okay, that recession or that stock market crash. Now, this is, say you have a $500,000 in IRAs, 401ks, investment savings, etc. And the market just goes down 20% only. You will, folks, you will guaranteed lose 100,000 instantly. And just imagine how long will it take for you to do that. This is besides that housing crash. This is different than the housing crash that I was showing you because you either procrastinated and did not take action right away, or you did not know how to do it. Or, folks, you have to move fast to protect your money, and your health and stuff. Now, what I'm about to show you is I'm going to make a big claim, but it is true, and here it is. How to recession proof or loss proof your money no matter what happens to the stock market, all right, economy, taxes, or even your health. Let's take one at a time. I already showed you the stock market, and even Warren Buffett says you get only the upside of the stock market without the downside risk. All right. The economy, where we put the money in the funds as well as the companies are all top notch. I showed you in that example, it is S&P 500. Whenever you sit in your car, or turn on the TV that today S&P 500 went up or down or whatever. Okay, so these are major companies and funds that did not miss a beat during those 2007, 8, and 9, and they are very strong even for the next ones too. Taxes, yes, we set you up in tax-free environment. Then it does not matter which party comes to power. You're okay, whether it's Democrats or Republicans, does not matter because you are a funky, you are not going to be affected by any of these things. Now, the big thing is in our day-to-day struggles or in our day-to-day life, we never stop to think about it that we are the money making machine for our family. Folks, please listen very close. You are the money making machine for yourselves and your family. What if this machine breaks down? What I mean by that one is, what if you have a heart attack, stroke, cancer, or any of the major illnesses or injuries or something like that happen to you? At that time, income stops because you are running to the doctors and hospitals to get yourselves fixed, and bills do not stop. And for most of the people, financial disaster starts. It's not only this thing that your income stops, the effect is much, much more domino effect. You might be thinking that you have an idea of what you will have it down the road in retirement plans and investments and stuff. You have a good idea as to when I'm ready to either retire or will have this much money. But folks, we never thought about it that when we cannot work and cannot feed those accounts there, the IRAs, 401ks, and investments and stuff, they all freeze. Then the dream that you have of your future will be affected with this thing. So, what we have is this is our proprietary product. So when we say this thing that no matter what happens to the economy, stock market, taxes, or even your health, okay, this is because shown it to you because of our products and everything. So there is no guarantee of life. We could be gone tomorrow. But what we are doing is we are trying to get the odds in your favor so that way this is the closest to a guarantee that you can come. And then those IRAs and 401ks and the investments and stuff can become self-completing because of you don't have to worry about that income coming at that time. All right, let's just conclude now. Let's get towards the end. And here we are, the Federal Reserve Bank. We were talking about, we started the talk with the home equity. They said it should be separated and put to work right away. And please do not procrastinate. Take action on it fast if you like what you are seeing that there are options for you, all right, to boost your savings and retirement and to reduce your risk, right? Then it does not matter whether it's the fires in Los Angeles or your tornadoes and your whatever it is. I want you to be funkies, for lack of a better word, please. All right. So again, like I said, let me just recap this thing. We are concluding now. Say you have your $500,000 goes down 20%, you will guaranteed lose 100,000. And if it was 40,000, as it happened in 2007, 8, and 9, it would be over $200,000. And just imagine how long will it take for you to save $200,000, that you lost instantly because no more procrastination for you anymore after knowing this thing and how to protect it. Time to do it is now. No more procrastination time left. All right. And then remember, I had used the word I want you to be funky. Yes, we loss proof your money to get only the upside of the market without the downside risk. And then we set up everything on autopilot. So you do not have to worry about what happens day to day or be worried that, hey, when you turn on the TV that that fund went down and you're getting nervous. All right. Folks, this is serious. Get to work right away if you feel like. By the way, you do not have to do nothing at all. Do not. I just wanted to. This is my giving back to the community and not trying to sell you anything. You do not have to do nothing at all. But I just to keep my consciousness clear that I have shared the knowledge with you. And after that, go to your own advisor or agent. And if they know those DEFRA, TAMRA laws, and if they can have that thing pass that test and give you the proof in a paperwork, no, then absolutely you're with the right person. And chances are you might be. But I just wanted to share these things with you. Now, like Stockman says, that there's a big bloodbath coming. He's even saying that it could be worse than what we had in 2007, 8, and 9. Whether it is worse or not, it does not matter. You should not be losing any penny of your hard-earned money from what you have just learned today, from what we showed you. All right. So now you're under no obligation, but again, I want to keep my consciousness clear, okay? And you might have a lot of questions also. For my regular clients, okay, I charge a $5,000 retainer to start with, and it goes up from there on. But I am waiving off that one in this giving back to the community and the country and the friends and family that I love. If you got this thing, invite and feel free. You can book a consultation. And in the post below, you had this thing, my calendar link. All right, you can book it there. It's a 20-minute consultation, and it's all, I'm a professional, it's all private and confidential. But over there too is confidential financial form, right? And if you fill out that form and send it to me before that appointment, I will give you ideas as to what you could be doing and what all your options are. And this is all free. This is my giving back to you. All right. And then you can even take it to your whatever you want to do, and it's your okay. But you have to move fast because this is a limited time. As things keep on getting towards the crash or the recession and stuff, I'm going to be getting very busy with my clients and stuff. Time to book it is now. Also, please post in your groups the same post that you got or forward to your friends and family and share it with your adult children also. What I have seen is many times people do not share it with their children, thinking that, wow, we do not want to interfere in their lives. No. And I feel that, okay, you should expose them to this thing, that if they are already well placed, that's fine. Or because many people I talk to, they say, oh, I already have a paid up home. But the risk is so much there, just like that Senator Trent Law. When the reality hits, then it is something very different. I do not want you to be caught like that. All right. Now, why I did this thing besides giving back to the community is this is a tribute to my father also, who was a very prominent police chief back in India. When I was growing up, he used to say, son, when you grow up, try to make something of yourselves, and when you do, just do not tiptoe through life. Try to help uplift other people. All right. And so this thing is, I look up and I talk to him and say, Dad, am I living to your expectations? Number two is that's why you see on my card you might have seen I'm the founder of Interfaith Charities International also. That's my giving back to the community in a big way. And so I don't believe in just, okay, my success is from every other angle and giving back to the community also. With that, I want to thank you so very much for your time and attention. I hope I had been able to give you more than what you might have expected when you joined in. And that's my mission, and looking forward to serving you more. All right. Thank you. Blessing.